Hey, Jeff Yates at Full Throttle Traders. This week, we've seen a clear rotation. Institutions are pulling money from the growth, heavy QQQ or NASDAQ, and reallocating into the value plays inside the SPY. You saw it today. You can see this in the divergence. The QQQ is lagging while the SPY holds stronger most of the day. This is driven by inflows into the financials, the energy, and also the industrials. This isn't just noise, it's a positioning signal. When big money moves like this, it's a clue that sentiment and leadership are beginning that shifting process. So what do we do as traders? Well, don't blindly buy tech. Pay attention to relative strength, like watch the XLV, the XLE, and the XLF for short-term opportunities in all this. And again, hang with me as I kind of walk you through some of the processes in here coming forward. Be right back with you. Okay, so as I mentioned, institutions rotated out of the QQQ and the value, which is the SPY and the Q divergence. If you saw that today, and we'll look at the market in a few minutes, you saw that we started off with the SPY higher. The Q's closed ground, so it lost more, it caught up to it, almost equalized, and towards the end of the day, the tech washed back out. Very clear in what they're doing in this. They're beginning to kind of recognize those value stocks and begin to move money into that. Number two, the SPY broke that key support level at 510. Wasn't by a lot, but it went down and tested that first support level. I think it went to 510 or 509.92, but it is messing with that level one support area. So momentum traders are eyeing the downside continuation. Remember, that move that we had yesterday was incredibly high. And a lot of times on that type of a move, which we've only had two times in our modern day lifetime since World War II, we didn't know if it's going to be pent up demand, the gap. It could have, but in this market here, it's pretty unhealthy in this. It gapped down $10, and that was respectable based on the size of the move that we had. And then it fluttered around, tried to go higher, and then sold off probably 15 or 20 bucks before it began to find some footing, and then gave that way back in the afternoon. So how to follow institutional flow into energy financials, the energy financials and staples for short-term gains. Let's take a look at some of those. And before I go to the markets here, I just want to kind of show you here. This is the bottom one here is, I have it covered up with my picture, but 410. So this is actually yesterday's on 4.9. You notice how the tech got bought. Everything was green, everything's red. But if you notice the difference in here, technology that was so heavily bought, now so heavily sold. Again, it's off a little bit here based on percentage, but you can see that from a sector perspective, this got rotated back out of in here. Financials, and you're seeing technology and energy. So what we want to look for is that relative strength where they begin to put money from some of these stocks that their sectors are rotating out of and putting them back into stocks, and that begins that climate of change, right? The people that recognize this early can get on board those just as you begin to see a smidget of that relative strength in there and leg in, or at least begin to nibble at some of those positions. That's how the professionals do it. They don't wait to see it go up and it's all green and then jump. They've already made their place. That relative strength that you're seeing is where that institutional trade is beginning to work their way through. And we recognize that and begin to kind of partake in that. Again, if you're wrong about that, at least you're only speculating a small amount of the money, at least initially here. Add to that position as it continues on. Maybe even add a little bit. I would do this in somewhere around 4 to 6 different adds in there. And we'll show you that here if we go to the next slide. So first and foremost, this bar here almost looks like paint by the numbers, right? Just an amazing day we had yesterday. And so a lot of people might have been expecting maybe we have a slight gap down of about $3 to $5. Well, it was surprising that they came down from 48 to 32. The open was a little bit lower. We had the CPI numbers out this morning that drove the market even a little bit lower initially before it rebounded just prior to officially opening here. Went right back down to the 8-period moving average. And the move down in here, as I mentioned earlier, you can see this is the 511 area. We went down here to 509.32. We began testing this level 1 support in here. So this tells us that the danger is not off. Even though we had a strong day, just a short squeeze type day, everything was just a perfect storm, but that doesn't fix the market. It's almost like if you're sick or you're ill and taking one vitamin doesn't fix. It's the course of things, the rest, the time that it takes to kind of evaluate that and get you back on the straight and narrow. The same with the stock market in here. But these tests of these areas are beginning to kind of show up what's actually down there, and that we could actually be setting ourselves up for another fall below the area. Yes, Trump had that flip-flop on the tariff yesterday, but it doesn't mean that it fixes the problem. It gave us a short-term fix. You slept good, but it doesn't fix the problem overall, right? Once the market begins to move in these lower levels in here, and words just don't fix it. Air is not a position. Air is anticipation, it's speculation, but it's not a fix, right? It's an important part of that, but you need other components to begin to bring this market into fruition. Now, let's drill down on some of the smaller time frames, and I'll draw these out where you can see the SPY here. This is the gap down at 10, 12 bucks. We struggled higher here, and that 6-minute bar took out the high. We came back down. These are no small potatoes. That's 533.5. Gosh, in 6 minutes later, we're at 528.5, right? These are $5 and $6 moves. I saw at one point $7 and $8 rate of change in the 2-minute charts in the SPY today. What does that mean? It means that the distance the SPY moves from top to bottom in a 2-minute bar is $6 to $8. That tells us that, man, we have complete days that go by that we don't do $6 to $8, and we're doing it in 4 to 6 minutes in time. So how does that manufacture when it comes to trading? The issues is that if you try to give things a tight stop when you're trading here, if you're right about it instantly, you can be at target pretty fast. But the chances are it's going to wiggle some. The spreads are opening up. It's going to go down $2, up $2. And so a lot of times you get caught by giving it too tight of a stop. It pushes down before it goes higher. If you give it too wide of a stop, you actually never hit the target, even though you've got room on the pullback, but you can never seem to get that move without kind of that jostling around in there. So it's very difficult to trade this volatility. You can see here, came right back to the magenta line here, the purple line. VWAP struggled 1, 2, 3 times and then set off to the races. This drop here, the SPY was at 532. And again, that low was at 509.32 or so, 509, where this low was in here, 509.32, yeah. So that drop right there, right? So 510, that's a $21, $22 drop. That is a miracle day in itself. And then we began to kind of shape back up. Again, you still can't trust the market. It runs right back up to the anchored VWAP off yesterday's open to VWAP back down. Did have a higher low here on the primary, drew a secondary line here. We actually took a play right here, did a 500 in the Qs by a 510 by 500 on a bull put credit spread. And again, the question was that we broke the high. We pulled back to a convergence of VWAP, anchor, and trend line. We took it right in here. We actually sold it right here. The premium was going to be either 25 cents, we got into 80, or 528, we got it, or 527, we got it right here. So it worked out good. But look how this actually began to kind of unfold. And I told the traders in the room, I said, this could go either way. Either we could break down this low, we came down below, tested the VWAP again, popped back up, or just sail off this little flag play that's going on in here. We kind of did both. Kind of dropped down in here, moved right back up to the top, and just kind of ended the day in post-market here, kind of navigating about kind of where we closed out here. So been a difficult day at best to navigate these markets, or difficult couple of weeks to that. But the key is that just stay either, if you're going to trade this, trade less risk. If you're doing $100 risk, you might want to drop that down to $35 or $50, but because you want to add frequency. Otherwise, you're going to trade that same risk at $100 or $1,000 or $5,000, whatever level you're trading. And if you're wrong, you're going to have to sit it out. It's hard to be frequent and have a lot of frequency in your trades when you have a large risk, right? You become a little bit more emotional. Drop that risk back a little bit here and allow you to take a couple different trades, but you're doing it just to scalp through. The other alternative is probably a better alternative, and that's to stay away from the market altogether. Let this shake out. Let this back and forth, choppy, non-directional market shape up a bit. Give us some better direction here that we can believe in and have confidence in. Get all this volatility, all this disagreement away. the market. Let's get in when the conditions are a little bit more ripe. Okay, my final point, as I was talking about earlier, you can see the difference of the SPY down here. We closed at 4.32%. The Qs or the NASDAQ closed at around 4.19%. If you follow this throughout the day, you're going to notice that the Qs had a much bigger drawdown or tech, and you saw that happen in the way that the sector rotation was there. As the day began to close, you saw the pairing between the SPY and also the Qs. They were similar. They were exactly the same at one point when I looked at them. And then at the end of the day, they began to separate. For the most of the day, they were up 0.6, 0.7%, 0.7 or 0.7% difference in the two. SPY leading the way, Qs on lower. And then it closed in and opened back up to a little bit less than here. You can see 0.17, 0.3 is so a lot closer in there. But for a lot of the day, that was where the rotation was happening out of here. They were moving money into the SPY plays, into some of those healthcare stocks. And you can actually see in some of these, in UNH and some of the Dow stocks, these are doing very well. And this is the XLV. So you can also, was one of the top performing sectors today overall. For the most part, it held a good part of the day. It was down near the open line, wasn't that big of a gap, not that big of a rotation. But you can see down in here, those areas are definitely closing the gap. Take a look at where the USO is down here, right? This is where I talk about moving money potentially into the USO. This is some of the oil. If you look at these sectors in general down here, XLE, when you start to see that relative strength coming back in here, that's the money coming out of techs beginning to get in a little bit more of staple products like the XLE or like the XBI and some of the other different offshoots of the healthcare, the drug maker industry. So, and we just be watching for that and see if you can actually kind of catch the scene, begin that turn. And eventually you'll see that flip where the SPY starts driving the Qs well beyond the Qs every single day. Now it's been flip-flopping, but that's part of the rotation process as it begins to kind of mingle and turn. And then we're going to see that turn as things move forward. Finally, if you like what you saw today, you can always come to Full Throttle Traders. We have a room full of people. We're in there most of the day, and we're talking about these things as they happen live in here. So just to further along your education process, great information that we broadcast throughout the day to kind of keep on track of this as it's happening in real time in our room. So thank you for attending and hope to see you in the room. Have a good day.